Welcome. Hope everyone had their lunch and got their sugar with their cookies already as we go right into this. So I'm Javi Corioso. I lead Uber's Federal Affairs and South local and state team. Very, very excited to be leading this panel on the corporate perspective, which for those of us who've been engaged on this issue, I think in these legislative hearings and votes and committees throughout the country, I think provide a very, very interesting perspective because it put things for a lot of the consumers top of mind. You know, what does this mean in terms of the food you put on your table, how it gets there, what it means in terms of, like Adam mentioned, your Uber price when you're trying to get home from a restaurant or from an airport, what it means, you know, staying at your favorite resort, hopefully in Florida. So it's a very interesting perspective that's offered when consumers think top of mind of the brands that they associate with and the day-to-day life that they live when interacting with these companies and industries. If you look at the CPI numbers throughout the last 2 years, cost of insurance is right up there with the cost of food and groceries. And it's the symptom of a broken litigation system that's weaponized by a billboard industry who have turned lawsuits into a $60 billion a year industry. This is a system that games juries, exaggerates damages, and is driving nuclear verdicts that extend far beyond the courtroom. The result is a hidden tax that now consumes 2 to 3% of GDP, more than $500 billion in 2022, and projected to reach $1 trillion by 2030. This is why PACT was built, because no one company can out-lobby, outspend, or out-message the industry on its own. PACT is focused on a coordinated, data-driven national campaign that brings together business leaders across different sectors to reset America's insurance market and end lawsuit abuse at its source. So let's get right to it. We'll start with a question for the group. From where you sit, how is lawsuit abuse affecting your industry today? And I think it'd be very helpful to provide some day-to-day examples on the impact to your operations.
Well, thank you for having me. So prior to joining the ATA, I was in-house at trucking companies. And the problem that we have right now in this current litigation climate is not what we like to say in the claims side, the number of crashes, in other words, the frequency of crashes. And it's also not the physics of the crash in terms of the severity of the crash. What it is the frequency of the severity of claims loss settlements. And what I mean by that is we have a damage inflation problem. It's settlement creep. And whether that's and that's outpacing sort of normal inflationary expectations around wage increases or the cost of medical treatment or just normal CPI growth. What we have is that growing body of soft tissue injuries that when I first left private practice and went in-house at trucking companies, you could have a soft tissue injury case, chiropractic treatment, non-surgery, that maybe had $9,000 in medical bills, and we could settle it somewhere in the neighborhood of $20,000, $25,000. Now we're settling them for no less than $50,000, typically closer to $75,000 or $100,000. And that kind of growth is outpacing any other reasonable explanation.
It's interesting that you mentioned those numbers because from Uber's perspective, even though we've seen a decrease in the overall rate of crashes reported, we've still seen a 50% increase in the cost of the insurance premiums over the last 3 years, which is just incredible.
Right. Again, I have that claims background, so I speak in terms of frequency and severity, not to be confused with the number of accidents or the severity of the accident. But you have to think in terms of passenger vehicles and trucks. There's been so much investment in safety and collision mitigation systems that there are a lot of mechanisms out there to prevent the crash or to mitigate the severity of the crash, which is very different than the the hospitality industry.
Yeah, for hotels, and I think understanding the context, the vast majority of the hotels, there are only about 60,000 hotels in the country. And the majority of hotels across the country are small businesses and franchised hotels. And so the large iconic brands license their name, and the majority of folks are small businesses. They're small business owner and operators of hotels, and they have faced a dramatic increase in their costs across the board. Costs are increasing at 4 times the rate of revenue, but critical to that equation is the cost of insurance. And so when you look at what the litigation environment is doing to these small business owners, it is crushing them, because those costs continue to increase year over year, and not by a little bit, but by 2, 3, 5, 100 times. When depending on the type and scope of the hotel. And the people that end up paying those costs are certainly the small businesses. They are the employees, when you reduce the amount of revenue that a hotel can gather. And then, of course, the consumers in the local community.
It's fascinating when you see the states where you've seen reforms, and other states where maybe the plaintiff's bar hasn't been as aggressive as in other states, down to the point where you land at an airport, and as soon as you drive out, you can't go more than 100 yards without seeing a billboard or some ad. Or as soon as you get to your hotel, you're just surrounded by marketing. If you turn on the TV, with even the weather reports being sponsored by some of these billboard attorneys. How much we mentioned the cost of premiums rising faster than inflation. How much of that increase do you think can be traced back to rising litigation from some of these very complex marketing tactics, billboard attorneys, and how does that show up in terms of the day-to-day cost for your members?
So I don't know that I have any data around the correlation between billboard advertising and the cost in terms of litigation exposure or risk exposure. But what I do know is that billboards feed the narrative to potential claimants that they can't settle a claim directly with the trucking company or that trucking company's insurance company, that they need to hire an attorney. So in 2024, LexisNexis did a survey, and it found that 85% of those responding to the survey were contacted by at least one attorney after their auto accident. That's not a trucking specific accident, but an auto accident. And 75% were attorney represented within 2 weeks. In that survey, only 15% responded that they went into the situation thinking that they were not ever going to need to retain an attorney. So that's a very small percentage. So that feeds into this whole narrative of corporate mistrust, and I can't resolve my claim or my dispute directly with the company or the insurance company. I needed to retain an attorney to help me solve that problem. In addition, I think that what we are seeing is that attorneys are quicker to file lawsuits, especially against trucking companies. They're less likely to engage in pre-suit negotiation and claim demand. And so that's the impact that I see that's coming from billboards.
And the vast majority of these are small businesses.
The majority of trucking company owners are small businesses. I had the luxury of working for some of our larger trucking companies that had incredibly high retention endorsements, but they are the minority. Very small percentage fit that definition.
Chirag, from your end, what's the impact on the day-to-day to your members?
I think the biggest thing is, you go into some of these communities, you look at those billboards, even the URLs, it makes it seem as though the place you're going to spend your vacation is going to be a death trap. I mean, it's absolutely terrifying. I think it's conditioning the guests when they come in for that particular purpose. And, for hotels, as I mentioned, the majority of these hotels are small businesses and they're franchisees. And so the assumption when folks are filing a lawsuit is that they're suing a faceless corporation. They're going to make out, they're going to get what's theirs, and then it doesn't harm anyone. And I think that is a huge issue. And the day-to-day issues that really run in for small businesses is that now they may be underinsured. There may be exclusions in their coverage because they're now susceptible as a business as a whole. There are other factors at play, and that really can draw huge challenges down the road for those hotels.
I think one of the narratives that you hear in this debate is, anytime a state legislature or a lawmaker is considering taking action on this, and like Senator Kennedy said, bringing more balance to the system, you hear a lot about corporate profits, impact to shareholders. I know from Uber's perspective, when you get in an Uber, you finish a trip, you get a receipt, right? It tells you this is how much you paid. It's broken out line. This is how much you paid if you're taking an airport trip. This was the airport per trip fee. If there's a per trip fee or tax in a respective jurisdiction, that's broken out in the line item, and then you get to see now in some states what the insurance cost is and how much of that fare is going towards insurance. And so, from the consumer perspective, it's a pretty clear picture that shows you what the impact of the cost of insurance may be in that city or in that state. From the driver's perspective, it impacts the driver in terms of, and this may have happened to some of you in the room, where your driver asks you, hey, how much is Uber charging you for this fare? I'm getting X amount, right? Like, this is how much they're paying me. And in that conversation, both the driver and the consumer completely forget the fact that in a jurisdiction like California, 40% of that fare goes to insurance. It's not money that's going to Uber. It's not money that's going to the driver. It's money that's being covered for insurance coverage. And so from our perspective, it's the consumer, and in some cases you can argue the driver who's paying for that lawsuit abuse. Who ultimately pays for lawsuit abuse in your industry?
Well, it's all of us. There is nothing that you receive in your home that you need or want that hasn't touched a truck at some point in its journey into your house. And so the excess commercial auto tort costs, outsized settlements, outside verdicts, administrative costs at the court, disruptions in the cost of disruptions in the supply chain, all of those excess costs mean that the entire supply chain is going to be stressed. And so when a shipper pays more for transportation costs, that in turn means that all of the food, the clothes, the medication, whatever you need or want is going to cost more. In addition, it's an overall chilling effect, as our previous speaker outlined for you. It's an overall chilling effect on the entrepreneurship of a small business in order to grow and expand. So a small trucking fleet can't become a mid-sized fleet. A mid-sized fleet can't become a large fleet.
I'd echo the same. It's this cost of social inflation. I think the previous speakers all talked about the importance of affordability for hotels. Ultimately, certainly a lot of those costs are passed on to the consumer, but it also shows up in other ways as well, with fewer amenities or lack of availability of amenities. Even if they may be offered at different times. And so these things are really challenging for a hotel that needs to be open 365 days, 7 days a week. 7 days a week, 365 days a year. And so those are the continued challenges that hotels will face as those costs continue to increase.
In terms of, can we dig in a little bit deeper on that? In terms of the franchisees and sort of the single operators, small businesses, the small business perspective many times just gets lost in this debate. In terms of pre-COVID and post-COVID, how has this issue become more top of mind, especially for those single operator small businesses?
It's become even more acute. As I mentioned, the costs continue to increase, and so the margins have gotten even smaller. And when this is your number one or number two costs on the ledger, and it continues to increase at a rate that you cannot control, and factors that are well beyond your control as a small business, there's not a lot that you can do. And as one of the other challenges that we're seeing is that there are fewer and fewer insurers in the market, which also then drives up those costs. And then there increases the challenges with availability or the exclusions, and now the underinsurance really becomes real because folks have no other choice than to than to take less insurance than they may need, or they may not be educated enough to make that decision. It also creates challenges with access to capital because banks will require a certain level of insurance, and so it's not just the one lawsuit that may exist in that moment. It's an entire ecosystem that's created that affects the hotelier, the employees, because now you may not have the resources to be able to hire additional employees, and staffing remains a considerable challenge for us, and ultimately the consumer as well.
Pam, you mentioned the mid-sized carriers. In terms of some of these nuclear verdicts that that we've seen, what's the impact to a smaller mid-sized carrier, and how is that different from some of the larger national fleets that may be that may be some of your members?
So small fleets pay more on a per mile basis for their insurance, their commercial auto liability coverage. The American Transportation Research Institute, which is the data arm of the ATA, recently updated a report that they have done in the past on sort of settlements and verdicts. And that report, that update was released in December 2025. One of the things that that report observed was that for settlements of less than $1 million, the settlements tend to be too high. In other words, people are paying a premium because they're scared of the alternative. The fear of a outside verdict is forcing them to settle at a premium. And so small trucking companies can absorb this. They're going to build their insurance program, much like you outlined, with perhaps less coverage overall. In other words, not very much excess above the federally required primary layer. They're going to perhaps change their risk management program in terms of what they have on their physical damage side or their general liability or their workers' comp in order to get savings on those policies to apply towards purchasing commercial auto liability. And then they might ultimately make the decision to close their doors.
I think coming out of the November election cycle, affordability was what everyone discussed. I think it's what most of the campaigns based their closing arguments on. And the three of us are hand in hand dealing with affordability, right? We run different types of complex businesses. We're very front facing to consumers, et cetera. Coming out of November and going into the midterm cycle, do you still think that lawmakers are underestimating lawsuit abuse and how it directly impacts affordability?
I don't know if it's an underestimating or an underappreciation. So I don't really know where I land on which word accurately describes, but I don't know how you can have a conversation around affordability, which really is the conversation, and not talk about the disruptions and the cost to the supply chain, because again, everything that you have comes by way of a truck.
Yeah, I'd echo that as well. I think they look at the symptoms as opposed to the cause of these affordability issues, and it's not one thing all the time. In this circumstance, it's having this conversation that's inconvenient to some people when they don't fully understand the business model, when they don't understand what goes into what these businesses must endure on a day-to-day basis. But also the broader conversation, to be honest with you, this was not something that I fully appreciated going back a couple of years. I've spent a lot of time with the risk management professionals in the lodging industry, and my God, the horror stories that they have. I mean, these are the things that'll keep you up at night because that's what's going to ultimately end up forcing folks to close their doors. And so as I was learning it and having those conversations with legislators and policymakers, they don't fully appreciate it. And then when you then layer on the complexities of the small business franchise model on top of that, in our case, that's something that you really need to take a couple of minutes to explain to somebody. And that's where I think the appreciation issue comes in as well.
Okay, we have a few minutes left, so we'll close on this. As Senator Kennedy mentioned, a lot of the state bills that have taken on lawsuit abuse are very complex, right? And like he mentioned, there's premises liability aspect to it. There's transparency and damages. There's phantom damages. A lot of components to these, whether it's in the case of Florida or Georgia or other states. how they've tackled this issue. In your view, what is one quick policy solution that can help your industry?
From my perspective, it would be access to the federal courts. There's too much game playing around diversity jurisdiction at the state level and the ability to remove to federal court. You'll have game playing around not necessarily disclosing that amount in controversy of $75,000. You'll have fraudulent joinder of co-defendants to defeat complete diversity, and then that co-defendant mysteriously gets dismissed when the removal clock runs out. So if you can open up pathways for suits against commercial autos in federal court, that would be an easy policy fix.
Yeah, for us, I think it'd be transparency. We saw it in Georgia. I think we're seeing it here on the federal level as well, identifying who the third-party litigation funders are. And understanding, is there a perverse incentive really to go after this? We're seeing the costs that are going up when folks are looking at this as an investment opportunity, is really just a means of finding justice. That to me is would be a no-brainer for most folks to understand. Just the value of that transparency would be significant. And here in D.C. with Congressman Hearn and Senator Tillis, they've really shined a light on this issue, and we really appreciate that.
Yeah, I think from our perspective, we're also seeing a lot of fraud, and as that becomes a bigger component of the affordability agenda that both Congress and the administration are taking on, some of these headlines on staged accidents and just the extent to which some of these players are just in your face, creating these fraudulent schemes, it's pretty outrageous. Okay, well, enjoyed this conversation. Thanks again, and I think we have exciting agenda left.